Warren Buffett and George Soros are two of history's most well-known and successful Wall Street personalities. While both individuals have undeniably risen to prominence in the financial world, their pathways to get there are markedly different. This video tells the stories of each of them. Important takeaways: George Soros and Warren Buffett are widely regarded as the world's most successful investors. Buffett uses a value investing technique in which he seeks out companies with excellent fundamentals. Soros is a speculative investor who relies on short-term market fluctuations and heavily leveraged investments. Soros and Buffett have both established multi-billion-dollar investment funds. Warren Buffett made his first investment when he was 11 years old. In his early 20s, he attended Columbia University and studied under his personal mentor, Benjamin Graham, who is widely regarded as the father of value investing. Graham contended that every security possessed intrinsic value that was independent of its market price. This approach eventually became the core investment philosophy of Buffett's first fund, Buffett Partnership Limited, which he started in 1956 with an initial investment of $105,100. Over the next 13 years, the assets of this fund grew to more than $105 million. Buffett used his success to form Berkshire Hathaway, a holding company for a variety of enterprises. It is worth more than $635 billion as of July 18, 2021. Each individual stock share is valued at an astonishingly high $417,601, mainly because Buffett refuses to perform a stock split on his company's ownership shares. Buffett, as a value investor, is continually on the lookout for investment opportunities that allow him to capitalize on price imbalances over a long time horizon. As an arbitrager, Buffett instructs his followers to be frightened when others are greedy, and greedy when others are fearful. Graham's 3 cardinal guidelines are responsible for most of his success. 1. Invest with a margin of safety. 2. Profit from volatility. 3. Know yourself. With these 3 tenets, Warren Buffett has been able to make rational investment decisions in the face of economic fluctuations. Soros, George Soros, born in Budapest in 1930, escaped Nazi Germany-occupied Hungary and immigrated to the United Kingdom in 1947. Soros began his professional career 78 years later, after graduating from the London School of Economics, working for several merchant banks in the United Kingdom and the United States before creating his first hedge fund, Double Eagle, in 1969. Soros was able to seed his follow-up hedge fund, Soros Fund Management, with the revenues from this venture in 1970. It was renamed the Quantum Fund after it ran from 1973 to 2011, returning around 20% to investors each year. According to Soros, he shut down the fund mainly due to overly stringent securities and exchange commission registration requirements. But Soros continues to take an active role in the administration of Soros Fund Management, a subsequent hedge fund he founded. Important: both Soros and Buffett are notable philanthropists, with Soros donating more than $32 billion to various causes and Buffett pledging to give away 99% of his fortune to charity. 11. Unlike Buffett, who bases his investments on a company's intrinsic value, Soros relies on short-term volatility and highly leveraged transactions. In short, Soros is a speculator who places little importance on a company's fundamentals. For example, in the early 1990s, he made a multi-billion-dollar bet that the British pound would significantly depreciate in value over the course of a single trading day. In essence, Soros was directly opposing the British central banking system's attempt to artificially make the pound competitive in foreign exchange markets. Soros made $1 billion from the transaction, garnering him the moniker, "the man who broke the Bank of England." 12. In conclusion, Warren Buffett and George Soros will be remembered as two of the world's most brilliant investors for the rest of their lives. Despite the fact that their financial tactics are diametrically opposed, both men have achieved enormous success in their respective fields.